All right, welcome to the session of the 19th of July. This is 1 minute prior to the cash equity open, and let's see how the session went. I'm just going to make this small comment. I rarely try to speculate where the market's going to go. I just work purely technically, and I take what the market is given, how it has traded technically, and I take my decision from there. Now, the only thing I have to add as well is because of the summer period, volatility is usually low, and previous break levels tend to usually hold. Yeah, so let's begin.
Okay, focus at first in case we stop at this previous hourly low, 71.75. Let me check where the FIBO is. Not that we're going to trade it.
I actually meant the previous hourly high, but anyway.
Around 70, okay. But again, FIBOs are not working the last 2 weeks. So focus first on 71.75, even at the open, yeah.
So let me pause it for a second. As you can see, I recommended to go long the 71.75, which was the previous hourly high, even at the open. I rarely trade the open. It's very sketchy to trade the open and very dangerous. But given that we had low volatility and the market didn't overreact the previous days at the open, I said, why not? Right, let's move it a little bit forward. Let's see how the market reacted. As you can see, I call the levels in advance. Yeah, I don't just call the levels in hindsight, say this one hold it or this one hold it or this one hold it. Right, so as you can see, the 71.75 reached. I was long during that time. The market gave us 5 points. I'm gonna move it. I'm gonna fast forward a little bit. I'm just gonna tell you what's happened. It moved to 76, gave you 76 something, gave you 5 points, and then it raced up down almost to the first FIBO of this move. And then it shot upwards. Personally, I tried to go a little bit greedy. I tried to take 10 points, and I didn't trade it very well because I averaged in double my size at the high to go for the break, and that didn't actually happen, but the call was okay.
Fucking kill them.
Right, there is some swearing involved. So at this point on time, I got out of my 5 points, and I was an undisciplined move from me. I got out essentially at 5 points, and then I averaged in again to go for the break and go for 10 points. Let's see what happened. Double top of the move, goes back down. As you can see, the market retraced from the first FIBO. That's a bullish indication. It's just the problem with breaks is like you never actually know when it's gonna break. It's a very dangerous style to have. Well, let's move forward. False break, and that was very annoying for me because essentially I got in at the high to go for the break, and that came back very fast. But during low volatile periods, I suggest people to take out the positions after 5 points. There is no point on holding position to go for a more directional trade. I didn't adhere to these rules, but I'm a human after all. All right, let's move to my next recommendation.
Yeah. Unfortunately, I doubled up here and took a bigger loss than I should.
I'm calling
The idea of
my
getting
mistake.
getting long 71, 75 has worked many times, even if you want to scalp.
Yeah, 71, 75 actually called many times.
Look at 67.50, not because of the fib only, but of this 5-minute high.
Right, so here I'm calling my second trade. I said, I mean, you actually heard what I said. Look at 66.50. Let's see what the market did.
Okay. 67.50, yeah.
67.50, yeah, okay. What does the market do? 67.75. I missed it by one tick. The level was here, stopped one tick shy. All right, let's move forward. That was a very quiet day, generally, until that time.
A bit in the very short term, a little bit bullish. So from here, if he holds here now, 71, 75, that's slightly bullish in the very, very short term. Yeah.
Right, so what I essentially am saying here is like since 71, 75 worked as a previous level, market works by steps. It stopped, it tried to stop people out, stopped at 66, 70, and then normally what the S&P does, it goes in the level 2 level. So the level 2 level was 71, 75. So the idea was if that thing was bullish, it had to stop hard. Probability wise on an up move, it will stop on the level that was broken previously.
They're protecting it. The Nasdaq looks a little bit more stable now to the upside. Took a while.
So finally we had the break. Let's see what I'm saying next.
All right. 1 minute to the hour, we have a Nasdaq closing higher. This is things are bullish now. Okay.
So observe what I said. I always work with where the market is going to close depending on the hour. So an hourly close above the previous hourly close is obviously a bullish sign. So it's better to wait for the closes of the hourly candles to get a sense of the direction of the market. I think around here.
Moves are happening on the extremes. So you could have a slow move the whole fucking day, yeah? And once it breaks this high or whatever this high, it fucking explodes fast. So let's see 79.25. So you have 79.25 and I have 76 as well, 25. The lowest it to go this move is 76.25.
So apart from the swearing, you heard what I said. I gave the first level, which was I think this one. I usually very I try to trade with probability, so I gave this a lower probability that's going to hold, and I gave 70. I don't really remember. Let me see what I said.
When on the initial move stops one tick higher than the break, pull your bid in case it goes fast down, yeah?
And I was right about that.
I looked 76.25.
Yeah, so 76.25 is my entry. Let's see where the market goes. Unfortunately, I had a bit at 76.25. The market low ticked 76.50. That was a perfect entry because I was on field. That was very annoying at this time. And because let me show you what the market did afterwards.
Unfortunate. So from that's 5 points already from 76.50. Unfortunately, didn't go 25, but you get the idea.
You get the idea.
Let's see if it protects again 79.25. If it goes down.
It has to protect 79.25 now. Again, that was a level 1 level. And as you can see, it went exactly to the previous level, and then I think it's gonna head upwards. Let's check. Cash flows increased, yeah, started again. Right, I posted, and that was the best trade that you could have actually got in, because effectively you put on a trade, and then you create, you don't create, the pattern that was created was higher high and lower high, so you had a low, a higher low, higher low, higher low, higher high, higher high, higher high, and those kind of trades you really don't even have a target. You just trust on this pattern, and the time that's gonna do a lower low of the previous candle, you get out, and you can hold a lot more than you can actually hold your trades. Now, how you're gonna realize that this is the pattern that needs experience. I don't think I did anything else. Since I missed that trade, it made no sense for me to trade anymore. And I think the market went back down. That was an easily, from 65 it went up to sorry, from 76 it went up to 90 almost. Right, so that was it for the 19th of July. I'm gonna create a video for the next day as well. If you enjoyed, go to Trader Stock, ask for Paris, come and join. See ya.